Households are bracing for an interest rate hike next week, with economists now widely predicting that the RBA's board is going to lift the cash rate by 0.25 percentage point on Tuesday. A rate hike would push up the monthly repayments for borrowers with variable mortgages. Now, to talk us through this, I'm joined now by Canstar's Director of Data Insights, Sally Tindall. Sally, thank you so much for joining us.
Thanks for having me, Amelia.
So, Sally, we've now had a few banks bring forward their rate hike calls. That's off the back of yesterday's inflation data. Where are we at now with all of their crystal ball predictions?
All right, the crystal balls are all focused in the same direction at the moment, which is a surprise, actually. We saw Westpac and ANZ change their forecast just yesterday on the back of that higher than expected inflation data. All four big bank economic teams now expect a rate hike on Tuesday. NAB taking it one step forward. It expects two hikes, one on Tuesday and one again in May. It will be interesting to see after Tuesday's meeting and after that all-important press conference from the governor whether some economic forecasts change yet again and add in another cut after Tuesday's cut. I've given that a done deal. It's not a done deal, but it is close to a done deal at this point.
So assuming you're saying there, Sally, that it is basically a done deal, what does this mean for borrowers? I'm going to bring up a graph now of data that you've actually broken down for us, which shows how much people on variable mortgages could see their mortgages go up by a month. What are you seeing there?
Yeah, so it's a cruel twist back to hikes. It's a U-turn we didn't think were coming. I think a lot of borrowers were squarely focused on the idea of getting at least one, maybe two more cash rate cuts, but instead we've done this about turn. And it's a really stark reminder of the fact that borrowers and renters across the country are often asked to do a lot of the heavy lifting when it comes to reining in inflation. So one 25 basis point hike would translate on a $600,000 mortgage to an extra $90 every single month on their monthly repayments. And $1 million debt, that's common for a lot of borrowers, particularly in property hotspots such as Sydney and Melbourne. They're looking at an extra $150 on their monthly mortgage repayments. That's assuming they've got 25 years left on their home loan. Look, thankfully, a lot of borrowers will be able to take this on the chin. They're in a good position because they've got extra payments on their side. They've got buffers built up. But for a lot of families who had to drop to the minimum every time the RBA cut rates in 2025 and are still battling cost of living pressures, this is going to be back to the drawing board for many people about the budgets and how on earth they're going to get it to add up.
And so is everybody who's on a variable mortgage, will they get their repayments automatically going up if there's a rate hike next week?
So what the banks do when there's a rate hike, assuming they pass it on in full, which is what we are expecting, is that they will adjust each borrower's on a variable rate their minimum monthly repayments to make sure that they pay their loan back within the allocated time. But a lot of borrowers, a lot of variable borrowers in particular, aren't paying the minimum. And that's because in the three cash rate cuts that we saw in 2025, a lot of the banks, CBA, ANZ, NAB, all didn't automatically adjust people's minimum monthly repayments down. So as a result, there's the vast majority of variable rate customers from those banks, we believe, are actually already paying a higher amount, and they may not see their monthly repayments rise if we see a rate hike on Tuesday, because some inadvertently perhaps, were actually paying more as a result of the cuts.
So, Sally, that's essentially built up a buffer for some households, but for others, they will have their mortgage repayments go up. And you're saying there that for some, that will be quite tough.
Yeah, it will be tough, and it's really important at this point in time to take stock of your interest rate. If you're on a variable mortgage, you're an owner-occupier, take note of this, 5.52%. That's the average. You want to be well below average, and a stretch target in our mind is 5.25%. Now, take stock of the rate, but also understand exactly what your monthly repayments might be if we see not just one hike, but two hikes, and make sure that you can clear that amount. If you can't, see where you can start making cutbacks. See if you can get yourself onto a lower variable rate. But again, if you need to, pick up the phone and talk to your bank about your options. There are also other people out there ready to help. The National Debt Helpline, and also an excellent place to start for those families who already know the budget is too tight to handle a rate hike. 1-800-007-007 is their number, and they can put you in touch with a free financial counsellor, which could be just, unfortunately, what the doctor orders if they can't meet their monthly mortgage repayments.